Welcome back. All right. Well, Tommy, talking about that beautiful looking corn crop across parts of the Midwest. But Dwayne, where you are, I know you mentioned things don't look great. So we want to know, are we getting close to a low for corn, but also talk about crop conditions up in that northern corn belt area?
Oh, I did start to smile a little bit when you guys were talking about pollination because I was thinking I'm not even close to seeing a tassel pop out of my cornfields up here, which maybe isn't crazy unheard of this far north, but we are definitely behind. Now, that doesn't mean we can't produce bushels. I always go back to 2009, horribly wet corn, really late harvest, but we did have bushels. Now, USA didn't find out that we didn't have the total bushels. That crop shrunk in the bin. Basically, you fill the 20,000 bushel bin, you only took out 15,000 because it was poor quality and very wet. So I mean, yeah, there's holes out there. I think we're close to trend line 177, 181 for a national corn yield is what I would use. But to get to answer your actual question, the corn market, I guess I do think we're close to a low. I always had 393 as kind of a harvest low projection for D's corn. We're not far off of that. You know, the first sign of a low is just running out of sellers, and the trade action lately is starting to look that way, but that doesn't mean we have to go straight back up though either.
Tommy, there's a lot of nervousness out there. Do you have on panic selling right now and just the dilemma that producers are facing?
That's a great question. Get in control of at least 1 year. So it'd be awesome if you said, I have nothing to worry about with 23, that grain's gone. Then getting 100% control of 24, whether it be making cash sales, using futures and options, etc. Talk to your crop insurance agent. If you're bold and aggressive, be smart enough to remember, you do not have crop insurance on 25. I need you to get in control of one whole crop year. If you want to invest a little bit of money in 25 floors, I suggest it might be the best money you lose. Let's take a chance of losing 15, 20 cents so we don't lose another dollar.
Switching to wheat, Dwayne. Wheat futures seeing some upside price correction this week after edging lower the past few sessions before that. Now, U.S. dollar weakness did lend some price support. But what about global demand? It's picking up, and so is export demand. Is that aiding wheat futures right now?
I think it is, and I'm actually super excited to talk somewhat friendly about wheat because it's been years and years since I feel like I've been somewhat bullish wheat. Now, I got to say we have a beautiful spring wheat crop coming up here in the northern plains. Definitely probably going to be a record yield. But to your point, global demand is growing. Our exports are starting to pick up here a little bit, obviously helped by the lower U.S. dollar that you just mentioned. So you know, it's hard to predict highs and lows, and I shouldn't go on one show and predict we're close to a low in corn and say we're close to a low in wheat, but I'll be that guy that sticks his neck out there, puts my head in the noose and say that I do think wheat is close to a harvest low here too. And with some better demand in the future, I think we can actually rally that market. It might be the first grain to actually rally out of this doldrum.
Tommy, do you agree with that?
Things are on sale. Let's take off our farmer cap, which Dwayne plays both farmer and he doesn't play. He is a farmer and a commodity broker and a crop insurance salesman. Put on your end user cap. The whole world is thanking the American farmer. They get to buy grain $1 under their cost production in many of them. And we're starting to hit that $1.50, $2 level in some of these commodities. 2 years ago, you were selling grain $2 above your cost production. Let's hope you don't sell it to the rest of the world $2 below your cost production.
All right, real quick, Dwayne, USDA's cattle on feed report. We're having this discussion before they're out with their cattle on feed report Friday afternoon. But when you look at some of those expectations leading into the report, you look at the price action that we've seen, especially with some of that bleeding over from the stock market. What advice do you have for cattle producers in the weeks ahead?
Yeah, even before we get the cattle on feed report, I don't like the price action. It feels a little bit like this market's topping. Now, it's really hard to go out there and hedge on the live cattle board because it's at such a discount to cash. But the feeder market board, the feeder futures are right with the cash market. I really like cow-calf producers going out, protecting those price levels. I mean, these are great price levels. And like to Tommy's point, you know, we all can kind of look back and see what we should have done in grains. Let's not let this opportunity pass up as a cow-calf producer. Let's protect these prices.
All right, Tommy, Dwayne, really appreciate you taking the time to be with us this weekend. We need to take a quick break, and then we're checking in with Machinery Pete next.